You say, yeah, we're overbought. The market's technically ahead of itself, 200-day moving average, 50-day moving average, but we'd be buyers anyway.
Yeah, you summed it up perfectly. I mean, I think so. To give some perspective around that, you know, as when you're looking at technicians or technicals, right now the 200-day moving average, over 90% of stocks in the S&P are over their 200-day moving average. When that number gets above 80%, that's typically a time to take a stand back as a trader. As an investor, though, as we are, you want to take a look at that and say, hey, if we get a sell-off, which I'm sure we'll get because that's just the price of admission for being an equity investor, we absolutely want to be in stocks because what are your alternatives? Cash or bonds? And both of those offer you no yield. And so we also think that next year, once we get control of this vaccine, when we get control of this vaccine and we have, you know, unemployment, we have unemployment come down, fiscal stimulus injected into the system, and the economy improving, I can't imagine not only will stocks go higher, but earnings probably go higher, and then you have multiple expansion.
Yeah.
So we'll definitely be buyers on the dip.
All right, Pete, so do you think we're ahead of ourselves at all, like some are wondering? I mean, Bryn says it, but says I'm buying anyway. Tony Dwyer today says there is, quote, excessive enthusiasm in the market. Citi's Tobias Lefkovich, quote, either the market is anticipating an even stronger 2021 profits outlook, possibly tied to rapid inoculation-driven recovery and continued corporate cost containment, or the S&P 500 may be ahead of itself in the near term. What do you think?
Yeah, I would say that it absolutely is ahead of itself, but that doesn't mean it can't continue, Scott. I mean, the reality is these markets, we overshoot to the upside all the time. We overshoot to the downside. We've seen that all throughout 2020 already, some of these overshoots in different directions. And you know what? It creates opportunity. Now, what I mean by that is there are times where it depends on if you are looking at the markets by what particular measure. And specifically when I say that, I'm talking about specific sectors. What's leading, what's not? What are the areas where you still have some room maybe to the upside, and what areas have probably already made that move and there's much more probably downside in front of it? But I think the reality is we're all looking at this, and not too many weeks ago, Scott, we actually closed the market with the volatility index over 40, and here we are now basically ready to break very close to 20. So the reality is we are in a very interesting market right now. It's been a very great trading market because the movement back and forth has been absolutely extreme at times. And then at other times, we've paused a little bit. Well, we've had an extreme move in November. This November has been an unbelievable move to the upside. It's been spectacular. Some of the areas of the market that rarely get talked about are really some of the areas that are really pushing the markets. Now, we do talk about energy, materials, and financials and all the rest of it. But how about the run that we've had recently out of biotech? So when everybody says, well, it's growth or value, I would say that it's quality. And what quality names I think exist in biotech is the reason why biotech has made the moves to the upside. And of course, obviously, with the focus on vaccines and everything else. But you take a look over at the XBI and the IBB, and you'll see what I'm talking about. There have been different parts of the market that have been leadership roles, and that's a good thing. That's a healthy thing. The fact that it's not always just technology or the semiconductors. Sometimes it's biotech, sometimes it's financials. But over the last couple of weeks, the energy space has been absolutely on fire, and it doesn't mean that it has to stop just yet.
Best month for energy ever, by the way, to your point, yeah. Pete. And as you're talking about the VIX and potentially breaking 20, I'm thinking about Tom Lee again. I mean, does Tom Lee have to be right about everything all the time? Tom Lee was talking about the VIX going under 20. Here we're on the doorstep, and that's just another confirming buy signal in the market. Degas, Tom Lee also says we should not view 2020 pre-pandemic highs as a ceiling for his so-called epicenter stocks. Strong year, likely to see a strong finish. There's a lot of bullishness out there. Are we overdoing it, or is this how it should be?
Well, Scott, I think what's happening to the market, and Pete talked to this, is that we received during the month of November what we all thought would have occurred over 1 or 2 or 3 months in first quarter 2021. So I think what we are seeing is that it's being priced in. The recovery has been priced in during the month of November. Now, on the upside, we're still going to see some movement on the upside, but I don't think it's going to be as strong as November. So going forward, I'm agreeing with Tom in that we really got a lot in November. I don't think we're going to get as much in December or January. I think this is going to give us a time to really start repositioning our portfolios and start focusing on infrastructure stocks because those are doing well. Industrials, energy, transportation have done really well during the month of November. I think they're going to continue to do well going forward.